Hi guys, sorry I'm a little late. My day job got in the way of my YouTube live. Oh my god, it's been a doozy. But so pumped. I got 28 of you on today, which is super exciting. So thank you guys for tuning in. Just want to give a couple shout outs if you guys are new, or I'd love to know where you're tuning in from and then what stage of the loan process you are in. And then also, please just start putting in your questions. I'm a loaner today, and so we're going to answer quite a few questions. So, yay. So, why hurry? Nice to see you. Kaden's on my team, guys. She's like my ops manager. I love her to death. So, if you have operation questions, she can help answer. Maggie B from Phoenix, AZ. Woohoo. Then we got Steven. Good to see you here. Unique. Scott's also a super awesome teammate of mine. John Knob, Leroy Brown, Junior, Andy Lamb. So super pumped to see you guys. Thank you guys for tuning in, and also just kind of let me know where you're at. I'm going to do a quick market update for those of you who are in the process of shopping your rate or needing to know if you need to lock in now. Today was a pretty fundamental day for interest rates. This is when the Fed was meeting in Jackson Hole to talk about their monetary policy. So tomorrow, when we get more interpretation of the Fed minutes from that meeting, we'll know what direction rates are heading. We did have a reprice for the worst, so expect that interest rates are on the rise. The better we hear that the economy is doing, the more likely they are to taper. If you hear the words taper in the news, and you hear that they're going to taper, then it's not good. And so we're going to get the interpretations of when they plan on doing that. Expect interest rates to rise because of it. One positive note, though, for all the people that were saying that there was going to be a housing crash, mortgage applications are up 3% from last month, which is to be expected. One of the things I think people forget about is seasonality with real estate. Summers are typically one of the slowest times, as are the holidays. And that's just because people go on vacations or they get occupied with what's happening with school. And so we always see a summertime lull. And we didn't see one last year because no one could do anything and school is online. And so people just kept buying. And that's also when rates started being historically low. So last year was an anomaly. So I don't think that the real estate market is headed in a negative direction. I did also read that CoreLogic expected 11% more houses to go on the market when forbearances expire in the end of September. So that's some good news for you guys who are getting kind of buyer fatigue out there, who have just, you can't find anything. There should be a whole lot more houses available to buy in the next coming months as people's forbearances expire. So I hope that helps, guys. Alrighty, so let's get started with these questions. Okay, so why hurry? So I hope oh, is that like a pun on words? Why hurry? Okay, quick question. What happens if you walk away from your refinance after you lock in your rate? The courteous thing to do is just to email and say, hey guys, I'm withdrawing my loan application, so you don't get people calling you like crazy. But nothing can really happen to you. Some companies will charge you for the appraisal and others will charge you for a rate lock fee depending on what you signed. But typically there isn't a monetary penalty to you aside from those two things. And generally speaking, it's only the appraisal. So really nothing. Kaden just went to a seminar today with a bunch of new agents. And so this was one of the questions that was asked to her. It says, what are some of the ways first-time home buyers offers are being accepted in this market, especially if they don't have the funds to pay the difference of if an appraisal comes in low? So really, I'm going to tell you that this has a lot to do with the strength of your agent, their communication skills, their negotiation skills, and if they've identified what's important to the sellers or the listing agent. Oftentimes I think it's a good idea for the client to write a letter just talking about how much they like that specific home, what it would do for their family, what it would do for them, why they like it, and then to have the loan officer reach out to the listing agent to go ahead and sell that client on how their strength of their application, and let them know how far they've gone along in the pre-approval process. Now, if you are somebody that has some additional funds, I often recommend that you turn in proof of your bank statement so that they can see that you have eligible funds. And typically those three things are really setting people apart in the marketplace. Lots of us talk about this on YouTube, but I can tell you that not many people do this, and it's less people than you think. So you really want to just stand out. All right. Let's see here. Whew, we got a bunch of rush questions. Sorry, the feed just updated. Okay. So, Arthur Ramirez says he's finally able to catch me live. Oh, are you my Arthur Ramirez that we're always texting? Is that you? If it is, I'm super pumped that you're here. If it's not, I'm also super pumped that you're here. And welcome to the live. Doug Schemmel, love your content. Thank you, Devin. Refi question, 3.625 to 2.5, but you only save $100 a month. That does not sound... So here's the thing. So sometimes when you have lower loan amounts, you don't really have huge amounts of savings. The other thing here is that you might still be paying mortgage insurance. So I would have them do a detailed payment breakdown for you and find out why that is only $100 saving. So it's either, like in my opinion, unless you're going to save $200 or more or be in the property for at least 4 years, $100 savings is something that you, like if you wanted to put down an extra principal payment, you'd probably see better returns on the overall interest you pay versus saving $100 a month. But just my 2 cents. Okay. A Brave Bird says, thank you for your knowledge. I'm trying to learn as much as you can. Thanks, honey. Nanya. Hopefully, sorry guys. I have like one of those senses of humors that I like just love sarcasm. So these names really like crack me up. Okay. Hopefully rates won't go up until sometime late next year. Houses won't be built until January, Feb. So guys, it for most people, they're expecting the Fed to start tapering in September. Once they announce the date, interest rates are going to go up. So now, are they going to go up dramatically? Probably not, because the Fed still has interest in keeping the real estate and housing market pumping at the same rate that it's going. So, I don't see that we're going to see a dramatic increase like 1 or 2% in rates. All right. So Shadow Llama, good to see you again, honey. Modern Dancer, Fort Wayne. Ooh, okay, cool. Maggie B, should I interview my agent first? I'm new to this. Guys, I think it really just depends. I always advise people to find out what their buying budget is. And then if you haven't met a real estate agent, I would ask your loan officer for a recommendation. And yes, they have a vested interest because that person is their referral partner, but I will also tell you that they have more experience working with that agent, and because they have more experience and they have more communication, those transactions seem to go and work smoother together. But yes, I would absolutely interview your agent, make sure that you see eye to eye on communication and on scheduling, and that they really understand what's important to you. Okay. Miss Taylor, we get you all to ourselves today. Yes, you do. Okay, so quick question, and Zeke, maybe you can put a poll on here. Do you like it when I do these by myself? I always try to bring you guys maximum value, which is why I've had guests on here. It is Arthur, guys. Give everyone a shout out to Arthur. He's pre-qualified, has been so super patient trying to get something in the market. Love this dude. So pumped you're here, honey. But let me know if you guys like these lives by myself. Okay. So Junior says, do I recommend a higher down payment like 20% or do less? My lender is trying to push me to do 3.5% when I have 20%. So no, I don't recommend a lower down payment, and you should ask them why they're recommending that. Typically what we do is we offer people 3 different scenarios on what is available to them. And sometimes sometimes somebody might have 20% and we might recommend doing like a 3.5% interest rate because they're better off using some of those funds to pay off debts to improve their credit score, to improve their debt to income ratio. So you really want to ask more details why, and then see if they can do a side by side and, give you the FHA option, but then also give you like multiple conventional loan options, or if not, give you a credit plan so that you know how to get to those conventional options. So I need more details on that. Would love to hear about it. So let me know. Okay. Andy says, today's buyer needs to have a solid down payment, meet seller's terms and price to even have the possibility of getting their offer accepted. Wouldn't hurt to have a strong LO too. All of that is true, guys. Like all of that is true. And you know what's interesting to the person that asked whether or not they should interview their agent? So I call like every listing agent that I'm asked to. So like when I know you guys are submitting an offer, if you guys let me know or your agents let me know, I call every single one. And it's so surprising to me the number of agents who just want to get me off the phone. And I have no idea whether or not they've actually heard me. And so oftentimes I'll follow up with an email or I'll follow up with a text message just to make sure that I've done that extra step. But you really want an agent that goes to bat for you, especially if you have a house to sell. And one, when you're submitting offers, they're not created equal. And there's literally like tens of thousands of real estate agents. And it doesn't matter on experience. It just matters on like give a shit meter. And you can tell by the way that person negotiates, the way that they communicate back with you. And when they explain to you that you didn't get your offer accepted, did they get the feedback on why? So just know, always important to interview your agents. And if you want to get something accepted in this market, it's got to be with proactive people. Alrighty. So I think I skipped some, actually, hold on. Okay. So let's see here. You like both ways. You rock guest and solo. Appreciate it. Okay. We like Lizzie. Okay. You guys are so sweet. Love this. Okay. All right, guys, I'm going to close the poll because I can't see any of the questions. I am not tech savvy enough to know how to do this. Okay, so what documents do you need to purchase a second home besides W-2s, paycheck stubs, bank statements, etc.? And also, why do you need to write a letter about why you're buying a vacation home? Oh gosh, guys. So the letters of explanation are so annoying because they're specific to the underwriter. And so depending on the area that you're purchasing in, not everyone understands like what's so different. So like in Arizona, so this is a fun fact about Arizona in case you want to move here. We are the state with the most diverse weather. So you can like buy in Flagstaff where it snows and the weather is so much cooler and it's very mountainy. You can buy in Sedona where there's amazing hiking, but it's full of red rock. And you can buy in Phoenix, and all of those areas are super different. And so an underwriter just wants to feel secure that you are not buying the property with other intentions, right? They don't want you to be buying it with a long-term investment in mind. And so they'll ask you these questions. It happens a lot for owner occupancy too. So like, why are you buying this other house? And they really just want to know that the house is newer or why you're interested in it, what features it has, especially if you're somebody that has multiple vacation homes. So FYI. All right, so let's see here. And then also in terms of documentation, aside from the things that you mentioned, depending on your income, they may ask you for tax returns, and they'll for sure ask you for your current housing expense. So either that's your mortgage and HOA statement or it's your current rental agreement. Alrighty. So Unique said, is Javier okay? He sounded a bit down. Did he break up with... Oh my God. Okay, so Javier has not broken up with me or Kyle. You guys, he's had COVID for like the last couple weeks. And like, I don't know, when I had COVID and you're isolated all by yourself for like weeks, it's like lonely and you get in a really weird headspace. Like I am somebody that is naturally introverted, and I was like, I don't know. I felt so down and so out of it. So it'll take him a couple of days, but he's still Javier, guys. And no, he's still in good relationship standing with me and Kyle. But I love that you guys asked that question. Okay, so Jen said from the chop, okay, I'm curious, what are the pros and cons of getting down payment assistance? Okay, so down payment assistance for me, if it's your only way to purchase a property, I say do it. Buying a home is one of the most incredible ways to build up savings and equity. But if you're somebody that has the money in the bank, if you like do them side by side and you're going to own the home for longer than 3 years, you will see that it costs you more money to do a down payment assistance and higher interest and higher fees, and then the cost of refinancing. So that's why I don't like down payment assistance per se. I don't like that you can't sell the property in 3 years without paying it back. I don't like that you pay a higher interest. I don't like that you pay higher fees. But if it is your only way, like this is why they've made it available. So there's that. Okay, and then John Knob says, if you put a large down payment, would your mortgage be lower or would it stay the same? So down payments don't make up as big of a payment difference as you guys would think. It's like typically $5 per thousand. So yes, the larger down payment you make, the lower your mortgage payment, but it like oftentimes it is super smart to see what your options are, because if you have money, I mean, in the house, the equity, it doesn't do anything for you. It's just building for when you sell. And if you can use those funds for better investments, something that's going to pay a larger return, higher than inflation and higher than the interest you're going to pay. So it has to be like over 8%. You might want to look at that. But if you are paying debt, which is going to be almost for sure over 8%, you should definitely think about paying your debt off versus putting a larger down payment. I know the Dave Ramsey people are going to hate that advice, but truthfully, I think having more monthly cash flow is the best way to go. All right, so let's see, who do we got here? Okay, so AW says, hi, Lizzie, what's the minimum you can put down? I want to purchase a second home for an investment. So it depends on the type of property. So if it's a single family home or a condo, you can put down as little as 15%. You will pay a very expensive premium for mortgage insurance and a higher interest rate. Best interest rates are at 25%. Most people will tell you it's 20. All right, so let's see here. Maggie B, why are homes being torn down? Oh, and they're leaving up one wall and rebuilding around that. Oh, that random wall. So this is actually very interesting and such an insightful question, Maggie. So in lending, technically, it is considered to be a remodel if you have one existing wall and the foundation. So that's why they do that, because they can get different kinds of financing than if you were to take it down from the ground up. That's new construction. It requires larger down payments. It's, different type of financing. It's harder to qualify for. So that's why they do it. So most rehabs, especially like in Arcadia, will have at least one old wall. So there's that. Okay. So Leroy says, when you first started originating, did you have somebody watching over you? That's a good question. Kind of. I know it's kind of like a weird thing to say, but I started as a loan processor, and actually I started as the receptionist, and I just worked my way up into different various positions. And so I had training along the way. When I became like an originator, I knew a lot about mortgages. And so I didn't have anyone checking my work in terms of mortgages, but I did have a manager. I mean, obviously compliance watches over us. And then when I decided to take my business to the next level, I joined a coaching program. So, and that is what definitely held me accountable to growing my business. So I hope that helps you. I don't know if you were asking questions on like who taught me how to do loans or who taught me how to build a business. So if you want to ask more questions, I'd be happy to answer. All right. So Brave Bird said, if student loans are in foreclosure, do I need to have them transferred into an IBR for a certain payment amount of time before, so I don't have to use the 1% or the 0.5%? So she doesn't mean foreclosure. She actually means deferment or forbearance. And so, nope, you just have to have an income-based repayment plan, and they can update your credit in the process of doing your pre-approval or your pre-qualification. So, or you can actually also ask for the fully amortized letter on the longest payment term. Is typically less than 1%, but oftentimes more than 0.5%. So I hope that helps. All right. So when do you usually get the clear to close prior to closing? It depends on the transaction and the length of time of the escrow. I usually like to get them 5 days prior to closing, but sometimes that's not always possible given the amount of conditions, the complexity of the loan, or if I'm getting under 30 days, it's hard. So you need it at minimum the day before you close, but typically we like to get them at least 5 days before your actual closing. All right, so when do I usually, any recommendations for where to invest proceeds from the sale if you don't plan to buy again for 5 years? So I'm going to caveat this with that I am not a financial advisor, but I always recommend maxing out any retirement accounts that you have. And I also would recommend meeting with somebody who can help you plan out like what you want your money to do. I have a lot of money invested in stocks. I have some money invested in actual businesses. I have money invested in real estate as rentals. And for me, it's all about cash flow on profitable companies, right, that have been around and have stood the tell of time. I am not somebody who's super risk averse. So I'm not jumping into Bitcoin. I'm not jumping into things that are really volatile. So that's not my cup of tea. But I mean, since you did ask me for my advice, that's what I would look for. And I would look for somebody who isn't just going to try to tell you to put all of your money in mutual funds. So you really want to, a couple things to like qualify your financial advisor. You should ask them how much money they make. If they don't make more money than you, ask someone else. And you should ask them how much money they have personally invested and what their growth is. If they feel uncomfortable answering these questions, guys, if they don't want to be transparent about that, they're probably not the right financial advisor for you. I truthfully follow the bigger bag theory. If you got more money and you've been doing it longer than me, I'm probably going to listen to you. All right, so oh, Unique says, oh, I'm so glad we're your 3 go-to for real estate advice. Okay, so are there any options to is with an unfinished bathroom, one of the 2 on the main living area? There, other than doing a renovation loan, or you can do a renovation loan and have that absolutely work for you. If there is already a working bathroom and there isn't any health and safety issues with the unfinished bathroom, I think you can argue to get that loan done on a conventional loan. I think what's challenging is that it's going to impact your value of your property. And if like there's exposed plumbing or there's a tripping hazard because there's no flooring, or, you know, I don't know, you have like wires exposed, those are all safety issues, and most lenders are just not going to be cool with that. So I have had somebody who just had a sink installed, you know, and a toilet installed, but not their shower, you know, and they like painted the floor and that worked. So I hope that helps. Okay, are there any, okay, let's see. How do I get pre-qualified? So getting pre-qualified is fairly simple. Since you're in Arizona, one, you can go to my website and apply online. And you could also call my team. Jen, can you put our team information in the chat for Maggie? But it's fairly simple, guys. It typically takes somewhere between 15 and 30 minutes, depending on your information. And what we're going to ask for is information for the last 2 years in regards to employment history, living history, income asset information. And then we're going to run a credit report, and we're going to ask you a series of questions that will make you feel like we're interrogating you. Like, do you owe any money to the government? Are you party to any lawsuits? Right. And, but it's fairly simple. Most of the answers to the questions are no, but, 15 to 20 minutes, just info. So I hope that helps any. All right. So let's get some more questions in here. Oh my goodness, guys. I think I missed a ton of questions. So repost your questions if I missed them. And then I will tell you, do you guys want to hear some like crazy loan stories that I've got? So I've got, well, I'm just going to tell you my crazy loan story while I'm waiting for you guys to fill in with questions. But you guys, I finally came up with a situation where my client is completely fully approved. Everything is set to go. And they have an estranged spouse that lives in another country. And they cannot re-enter the United States. So it is like super interesting figuring out how I'm going to get this deal closed. So if you have an estranged spouse, or if you know that you're married to somebody who's out of the country, and you're buying real estate, it is super important for you to know that they have to sign something even when they're not going to be on your home loan. This goes for like when you're filing for divorce, right, is another way to think about this. So if you have an estranged spouse, they will have to sign a disclaimer deed, meaning that they have no responsibility or ownership in your property if you're in a community property state. Now, turns out there are certain countries that have agreements with the United States in terms of notarized official documents. Mexico happens to be one of them. And you can actually figure this out. Turns out it needs an apostille notarization. But oh my Lord, guys, this was like, I mean, If I don't get like the goat of all mortgages or just getting loan officers, I don't know what will qualify me. This was seriously one of the most difficult things to figure out, and it took me like 3 days. So, oh, yay, some more questions have popped up. Okay. Any lenders that are awesome that I can recommend in New York? Absolutely. The Scott Foreman team, I think, is excellent in New York. If you guys need other lender referrals, just go ahead and post them here or email my team, and we'll get you in contact with someone. Okay, so Nunya says, I don't think the market will crash like it did in 2008. I think we'll have a correction, though, but not like 2008, just my 2 cents. Okay, so here's my theory on this. So markets shift for sure. And what we've experienced in 2020 is not a healthy market. Whenever you see that things are frenzied, people make terrible financial decisions, banks make terrible financial guidelines, and we're just like prone for something bad to happen. Now, with that being said, we've already started seeing the market shifting in a positive direction, but whether or not it will crash is like the opposite, right? So what they're saying right now is that we saw almost a 28% increase in home values in 1 calendar year. Okay, that is so much. When they talk about appreciation, just to put this in reference for you guys, it is on a rolling 12-month average. So it means that like it's from August to August. And so if things are declining or they're getting lower, right, we'll start seeing that percentage go down. But it doesn't mean that home values are declining. It just means the percentage at which houses are appreciating, so going up in value, is shrinking. And so they are expecting that home values are still going to rise somewhere between 3 and 5% nationally. So home values are still going to get more expensive, but they won't be going up double digits because, quite frankly, if something goes up by 28%, like incomes didn't go up 28%, people won't be able to afford homes. So yes, absolutely a shift. It should be way more buyer friendly in 2022, and it actually already started to be way more buyer friendly. In order for a crash to happen, guys, we are going to need to see a significant amount of houses come on the market, and then a significant decline in buyer demand. And right now, as it stands today, there are not enough available houses for population. And so until that problem is fixed, which they don't anticipate until 5 years from now, I don't see what it will cause like a dramatic shift downward. So I think values are kind of here to stay, but appreciation is not going to continue to go up like this. Let me know if that made any sense, or if I just got too mortgage nerdy on you. Okay. All right. So any lender referral. Okay. Same. William Gordon, go ahead and email the team. Actually, guys, I'm going to go ahead and put our team email. So team. Look at me. I'm so good. I'm multitasking. Mortgage.com. And then this is our team phone number, guys. Okay, so funny story. It took me forever to remember our team line. Like, no joke, we had it for like 2 years, and I would never say it out loud without reading a business card. And it's like literally world's easiest number. I have no idea how it took me so long. Okay. All right, so let's see. Okay, so what's the lowest fixed rate I've ever seen on a 30-year mortgage? I actually think like 2.25 was the lowest I've seen. I saw 1.99 once on a 15-year. I thought that was super low. It did also cost them 3 points though, and I was like, this probably doesn't make a lot of sense. Okay. Miguel Rivera says, when the boomers start to pass, we could see inventory shifts in the future. You must be watching my channel. You guys, I don't know what happened to Darren. Darren makes me laugh so much. So he's not here, but he always jokes with me that I like to talk about this thing called the silver tsunami. And it's a very real thing, but it will not happen for about 10 years. And who knows what will happen by then, right? So one of the freakiest things, guys, if you pay attention to population growth, millennials are not having a lot of children, and then they're having children later on in life. So in all fairness, we're going to have the boomer issue, but then 30 years from now, when millennials' children decide to have to buy properties and create new families, I bet there'll be a surplus of homes then too, but I will be in my 80s. And so hopefully I'm not still slinging loans. Let's hope, guys. All right. So Aurora Borealis says 2 trade lines at 8 months ago. Wait until they're 13 months or apply now. So, you know, so technically after 6 months of having trade lines on your credit report, you should have a sufficient enough credit scores to qualify you. But let's say you get a refer eligible on your loan. They may ask you for alternative trade lines like rental or utility payments to help back this up. And I don't know for sure if this is going to qualify you for a conventional loan. So I always tell people, you know, you want to start the pre-qualification process early, but for you, I might recommend waiting 12 months and then making sure that both trade lines that you have are paid down under 30% for at least 30 days before you apply. Oh, Miguel says he's so inconsistent and doesn't watch my lives. Well, I'm glad we're on the same page. Yeah, look it up. It's called the Silver Tsunami. And I'm sure you already know this, but tsunami is spelled with a T. I did not know that for a while. So there's also that. It was like one of my Alexa questions. I'm like, Alexa, how do you spell tsunami? Alrighty, guys. All right, let's get some more questions up in here. Like, this is like my jam. You get me for an entire hour, and we've got like 90 minutes left. Or no, not 90 minutes left. Oh my God. That would be like the world's worst live. We've got some time left. So let me answer your questions. All right, guys. Oh, shoot. And Jen very politely emailed me a list of questions that were already sent to me that I have like literally forgotten about. Okay. So, can I give some pros and cons to getting loans serviced from those online companies like Rocket Mortgage that offer no closing costs at a low rate, etc.? So here's what I'm going to tell you is that whenever you're dealing with an online bank, it's super important to get multiple quotes and to ask them, especially if you are in the purchase transaction, what their actual underwriting timeline is. So these online banks, guys, some of them are not able to disclose your loans for 5 days. The requirement is 3 days, just so you know. They can't lock in your loans. They can't order your appraisals on day one. And so oftentimes they start you from behind the 8 ball. And then if anything gets tricky, like you're buying a condo or a manufactured home, sometimes the loans just fall out of escrow because they don't know how to handle it. So pros are that typically they're the cheapest places on the market. Cons are that you have less control and your agent will have less communication. And buying a home is the second most stressful event in a person's life. First is death of a family member, and we're talking about short-term events. And so if you want to roll the dice on your purchase, I mean, I guess you could, but I think it's going to be a stressful transaction. All right, so I'm hearing people say they're waiting for the eviction moratorium to be lifted for extra inventory to come on the market. What are my thoughts on this? So like basically they talked about this in that report today. There definitely will be some people that will sell their homes because they were investors hanging on or they did a forbearance. And so this is part of that 11% increase in properties that will go on the market. I mean, I definitely can see that. I can see why we'll see additional inventory. And I definitely think that there are some landlords that do not want to hang on. They're part of the forbearances and they're going to release their properties because they were super burnt on that investment. Are there any recommendations on guidelines on when to lock in an interest rate? We're closing in 30 days. So I say that if you're within 30 days, it's good to look at locking. You know, the next couple of days are going to be really tricky because we're probably going to get some not great feedback about the Fed meeting minutes tomorrow. If you guys follow me on Instagram, and I am Lizzie with 1Z, which is really confusing, but you can thank my mother. Irvine. So I'm Lizzie Irvine. That's my handle. I'm going to be doing an update on what the interpretations are and what happened during interest rates. But sometimes what happens is that we get this knee-jerk negative reaction in bond market, and then we see a correction. Typically when this happens at the end of the week, like the week after is typically a better time to lock in, but you are going to want to talk to whoever you are dealing with for your pre-approval, and you want to get their best advice. And then if it's at an interest rate and a payment that you can handle, I would just lock in. I think the next especially now because you're 30 days in. I think the next couple of days are going to be crazy. Okay. Happy Girl says, also my interest rate on my current home is amazing. Can I switch it over to a new home? Oh man, if that was a real thing, I would probably not have a job. Just kidding. No, unfortunately, interest rates stay fixed with the property that you purchase. So unfortunately, it's on that specific property. But what's awesome about that is that if you make that an investment property, the interest rate does not change. So interest rates are still historically low though. And I think the report that I was reading today, actually, I think said that interest rates are actually an eighth lower than they were a year ago at the same time frame. So I think you're still good to lock in now. All right. Have I heard of Zinix and what's my opinion about it? Yep. I've heard about it. It's probably the best training for mortgage processors and mortgage loan officers that I've seen. I've personally never sent anyone to it, but I've had lots of people talk about it and recommend it. So, I think it's also the only real game in town for training for mortgage industry. So I would say do it. Okay, Gonzo Fam Bam says, how many times does your credit get run prior to closing? I close next Tuesday, still waiting to hear back on the clear to close. So this is a fun fact. Typically, your credit is only run one time in 120 days. So typically, it's 9 months of shopping and then 30 days to close your home loan. Now, we do monitor your credit the entire time. So if you stop paying your bills or you max out your credit cards or you finance anything new, we have to repull your credit. So typically it's like we've pulled your credit for pre-approval and we're not pulling it again, but sometimes it could be like twice in a transaction. And it's rare that it's more than that, unless we're trying to do like a rescore. Okay, I've heard mortgage payments on new construction sometimes only have the property tax of the lot and not the house for the first year. So this is dependent on your mortgage lender. Most mortgage lenders will apply at least a 1% calculation and impound to the property just to ensure that you are going to pay enough property taxes when they're due. But they can only hold those impounds for so long before they're reimbursed to you. So you just do want to be prepared that typically your home taxes are assessed, like at least in Arizona, a year after you purchase it. They're always assessed in November. So you just want to be aware that it might take a while before taxes actually catch up. And some people are really underprepared for what that looks like. But you will typically always get qualified at least 1% of whatever your purchase price is. Okay, my mom can't qualify for a refi, but we've been told by someone, I think we can co-borrow to qualify. My brother and I just bought a house last year. Can we co-borrow with her, and how long would we have to wait? So it depends on what type of loan you guys are trying to qualify for. Just so you guys know, everyone take note on this. You can absolutely not have a non-occupying co-signer on a cash out refinance. So it makes it really difficult in a situation like this. Why specifically can't she qualify? And then the only other options you're really looking at are like rate and term. Like, what are the goals of that refinance? Like sometimes what happens, so like one strategy if she needs the cash out is maybe to get a home equity line of credit or to get a hard money loan for the additional cash and then do the rate and term. So I need more details on why she can't qualify and what she's trying to do. Okay, how does credit cards get calculated for debt to income ratio? Well, it depends. So if it's an Amex card with no payment, we typically take 5% of whatever the balance is. But other than that, it's typically whatever is reporting on credit. What are some of the up and coming neighborhoods in Phoenix? Guys, I wish I could answer that. I'm pretty sure it's like, I don't know if I could get in trouble because I'm not a realtor, but also I never leave my house. I go to the office and then I come here to do the live stream and then I go home and then Skylar and I watch a lot of Netflix. So I wish I could tell you, but if you need a good realtor recommendation who could tell you about, up and coming areas, I'm sure it's that. Or you could Google search it. You could Google search hot neighborhoods in Phoenix. Okay, so if it's a rate and term refinance, yes, you can co-sign for her. Okay, cool. All right, what are my worst nightmare borrower problems? Okay, so I have so many of those, but typically they always come down to people who buy things during the transaction and think that we won't find out, or they quit their job because we've already sent out loan docs. Literally last week, you guys, I don't know if you guys have seen the show White Lotus, but I just told you I like to binge watch shows. So it's like a show about how people treat resort staff, but like, I swear to God, I was like, this is my life, except I work in loans. Like, people are so rude without realizing it. So I had a gentleman literally finance a car, ask me what it would, if it would matter if he financed a car. I said, absolutely. I'm going to have to include that into your debt ratio. That looks fine. Your credit looks good. But we also have to show proof that the old loan was paid off and what this new payment is. And I have to get it reported on credit. And that sometimes can take some time. Just so you guys know, sometimes auto places don't just pay off the loan right away. They shop around the loan they've sold you to other places and then pay off your auto loan. So it can create some additional stress and definitely more paperwork. And as I explain this, and I'm like, look, if you can wait the 2 weeks, I would wait. He literally had the effing audacity to be like, well, I guess you're just going to have to do your job. I'm like, so you're saying you already bought the vehicle? I'm like, okay, well, awesome. Well, here's all the stuff I need. But that's like my worst nightmare stories. It's just how people talk to us. It's just like, I can't even tell you. Like, one time I had to get a deposit verified from someone, and they're like, I'm not a criminal. Why do you got to verify my deposits? I'm not like blank the different race that they were. And I'm just like, this is 2021, right? Like, you get canceled for that shit. But honestly, like, that's my worst nightmare story. So yes, it's crazy. So my favorite show, let's see. What is my favorite show? I just watched all of Downton Abbey. Is that surprising? No, I just watched all of Lost in Space. Oh, my favorite show of all time, hands down, Schitt's Creek. Hands down. Best show on TV. Okay. Yes, what a jerk. But like, they're my jerks, and I'm super grateful that I do their home loans. But you did ask me what my nightmare stories are. Okay, so Jose Negrete, nice to see you back. Said, AZ community property state, what are the pros and cons with home ownership? So if you guys are so inclined on wanting to understand home ownership, I just recorded a video about how to take title. Very important, especially if something bad happens to you, that you guys watch this. But in Arizona, you either have to disclaim off of responsibility of the home, or you buy with the person on title, so they have to be aware that you've purchased. And in Arizona, it's not like final. So if, let's say, they disclaimed off the property and then you paid with joint funds or joint bank account, they can still actually go after the equity. So it's very, very complex when you have a community property state like this. The pros are that if you're married to the person, it's hard to get screwed. But the cons are, like, if you have an estranged spouse, it's hard to buy or sell any real estate. So it is just like kind of crazy. Now, one thing I will tell you guys, though, is that you really have to understand how you take title to a property. And I know this is like super boring, but I had a client recently, and she was married to her husband for 30 years. They did a refinance, and the loan officer was not paying attention to how they took title. They took it as husband and wife, but they did not take it with right of survivorship, which meant that when he died, because he did die, and I got to do her refinance, I had to literally get her to go to probate. She's on a fixed income. Her husband, who made all the money, just died. We had to pay for an attorney. All of her children had to agree to give her their percentage of equity so that she could refinance it. You never want this to be you or your spouse. So you really want to be educated, especially if you're buying with somebody who's not married to you too. Like, you want to make sure that you know what happens to that property when you die. So I obviously recorded a whole video. I'm not going to do the whole video on here, but you should watch it, please, and give it a thumbs up and comment. Okay. Okay. Can adding my wife as an authorized cosigner on my older credit cards be a quick way to get her credit a bit higher? It's 740, which I've heard is a transition between rates. Actually, 740, guys, is 740 and above is considered the best. Now, if you're looking at Credit Karma, it's hit or miss, truthfully. So like on Credit Karma, that credit score might be lower or higher. Typically they're lower. And so yes, adding her to a credit account that you've had for a long time, so long as you've paid it on time and the balance is not over the limit, typically like 30% or less is like ideal. So if it is that, then yes, I would add her. And typically it takes about 30 days for that to report on credit. It's not immediate. Okay. And you also want to make sure that they're the type of creditor that will report an authorized user. Because if not, it's not worth even adding her. And you might have to make her a joint owner. So it's joint owner versus authorized user. Okay. So I did not read any of these questions. So I'm going to, and Zeke, I don't know what to do. I don't like these things. I have to like close the poll. Otherwise I cannot see the rest of the questions. I'm such an oldie. Sorry guys. Okay. Okay. Oh, so you guys have never heard of Schitt's Creek? I just did you the biggest favor ever. Like best show on television. Okay. Yeah, Lost in Space did get canceled, but they are giving us a season 3, so we will find out what the hell happened. Okay. What's a renovation loan? So a renovation loan is where you finance in the repairs to the property. And essentially it's like, I want to explain this well. So it's based on the after improved price. And so essentially, let's say you buy a property for $100,000, it needs, $30,000 worth of work. It's like buying the property for $130,000 and financing in the repair costs ahead of time. It's a really great way to buy a fixer-upper property. They do take longer. You will need licensed contractors and multiple bids, but an awesome way for you to buy a fixer-upper. I don't know how many renovation loans are getting accepted at time of purchase, but it's another really great refinance that you guys can do. And they're available for FHA and for conventional and for VA. So great question. I enjoy this stream. Well, thanks, Dollface. Appreciate this. Okay, so Nunya said, glad you said that about Credit Karma. I thought something was wrong with the credit report because it always shows way higher. I know. So the problem is that it's a really good reporting system to show you what's on your credit. You should always know what's on your credit. Sometimes there are collection accounts that aren't yours or somebody's stolen your credit. I mean, that stuff really does happen, and it's always important for you to understand what's being reported. But they have different algorithms, quite frankly, for how they calculate scores. And like in a mortgage, our credit reports are geared for how likely you are to make your mortgage payment. And so it's an industry specific credit report. So we use a Fair Isaac report. And so Credit Karma uses a plus scoring model, and it's just, they're not the same. So, and it goes up to 950, where a FICO score goes up to 850. So just in general, like if you have a larger span, like you're going to have a higher credit score, even though it's probably like the same percentage. All right. Yeah, I feel like Schitt's Creek ended way too early too. Honestly, I was kind of offended, but Sarah Jessica Parker said that sometimes it's best to leave a party before it's over, when it's still fun. So I feel like that's kind of the thing. Although how funny that she just keeps coming back to that same party she left. There's like a million Sex in the Cities now. Too funny. I could talk about TV for days, guys, just so maybe let's make that a different stream. Okay, so adding my daughter as an authorized user to help her start credit would affect my credit. Current balance to the Discover is 0, and I always make my payments and pay it off every month. Nope. So guys, just so you know, adding somebody as an authorized user does not impact your credit. So if they have bad credit, it's not like contagious. You won't have bad credit either. Now, if you co-sign for somebody and they don't make the payment, that will for sure hurt your credit. So what you are doing is just going to help improve her credit. But this is a common question, guys. I do actually get asked this all the time. Like if applying to somebody with bad credit is also going to give you bad credit, it's not like that. It will give you a worse rate though. So your terms are always based on the lowest mid FICO score between the 2 borrowers, or like the 4 borrowers, depending on how many people qualify. Sometimes I forget to breathe answering these questions. So sorry for the deep breaths. Okay, so do I recommend paying a double amount on the first mortgage payment? Yes, absolutely. So if you want to knock off several years to your mortgage, pay a double payment on your very first mortgage payment. And the reason for that is that all of your payments are then calculated off of the lower principal balance. And so every single month, more of your payment goes to principal than interest, and it accelerates that payoff so much sooner. It's the best strategy for knocking several years off. You'll want to see an amortization calculator to know exactly how much the average was 7 years, but it's a huge thing that you can do. I could not recommend that more. Okay. Can I do a reno loan if I already own a house? Yeah, you can absolutely do a reno loan. It's you just do a renovation loan as a refinance. And then Steven, so Sammy actually started her own business. She is doing an assistant business called Super Assistant. So if you guys are business owners or real estate agents and you need help with, training your personal assistant, she's your go-to gal. So that's what she's doing. She's just moved on to bigger and better things. Okay. But yes, I'm very lonesome without a sidekick. Okay, so let's see. Will I lose my interest rate? Yep, you always refinance at whatever current market rates are. And when you're borrowing more than what the house is worth or more than your purchase price, I mean, in generally, you're going to have an impact to your interest rate. But once it's improved and once the renovations are done, you'll have so much more equity. So just an FYI there. Okay, so some questions that were actually mailed into me is I'd love to hear your opinions on mortgage insurance and that pays the lien in event of an owner's path. Okay, so when you close on your home loan, you will start receiving all kinds of solicitations, and there are a lot of them that are geared towards mortgage life insurance, which is just a life insurance policy that will pay off your mortgage specifically. My opinions on that are not everyone should pay off their mortgage, truthfully. Now, people do because they're scared they won't be able to pay the mortgage payment, and people's security is often based in their homes. But I always recommend that you talk to a financial planner because mortgage insurance the insurance has to do a couple things. One, it has to pay for the taxes that the person will have to pay when you pass, right? So they have to pay taxes on those funds. And then two, there might be other investment vehicles that will actually have a greater return and then allow them to pay the mortgage payment and then grow additional assets. So you really just do want to talk to an advisor before you make those decisions. I think that you're better off personally getting a really good life insurance policy. All right, so Amex, Chase, B of A, Discover report authorized signers to credit bureaus. Anyone wondering, I just did a quick Google search. Yes. Well, good. I'm happy to hear that. Oh, and Citi. Good job, Miguel. Okay, so Nanya, each payment is $1,800, and the very first payment you make is $3,600. Your payments will still be $1,800, except that there is a percentage. So you'll ask them for an amortization schedule if you're currently in the process of purchasing. So ask them for an amortization schedule because you will see where your payments will be at the principal that your home will be once you make that big principal reduction payment. And you'll start seeing what percentage of your payments actually go to principal versus interest. It's super helpful. And honestly, it's the best way to knock off a couple years. All right. So from a lender standpoint, what happens when you get into underwriting and the portion dealt with prior to the home? Wait, some of these questions, guys, I love you, but I can't read them that well. Okay, so you go through the pre-qualification process and then you don't find a home for several months. Do you have to go through the process all over again? Essentially is what that question said. So yes and no. So we typically have you pre-approved for a moment in time, and we've asked you for W-2s, potentially tax returns. If, let's say, you find a home 3 months later, yes, unfortunately, I'm going to need the most recent 2 months of bank statements, and then I may just only need one paycheck stub. So it isn't the whole entire process again. 90 days is enough for where I don't have to, repull your credit. But if it takes, the average sales price now or sales time is 290 days. And depending on when that 290 days started, sometimes that falls into a different calendar year. And then I'm asking for more tax returns, another W-2. So unfortunately, yes and no. Okay, what's my take on a home warranty? Do I think it's worth it? Yes and no. um, so I, so here's like what sucks, okay? So I have never ever been able to use a home warranty. Like, I've just never had a thing that was actually covered under a home warranty. So I've always felt like they weren't great. But I've had lots of clients who bought a property with maybe an older AC unit that then that was covered and they ended up getting it fixed. I mean, I think that for if you don't have a lot of reserve money and you are buying an older house that maybe you can't afford to do renovations on, I think it's always a good idea. I like the warranty on my car, even though my husband hates it. I don't know. I don't know how I feel about warranties. Apparently, I'm very conflicted. Sorry, that was a terrible answer. I will think about it more and then I will get back to you. Actually, quick question. Would that be a boring YouTube video? What's my home warranty? Let me know. Let me know if you think that would be a boring. Okay. So I'm going to answer one more question because I showed up late, guys. But if you have one dying question that you want to ask me, put them in the chat below. I'm going to ask this last question because it's a good one. And so I will get to these. So I'm buying a house right now, but I do not want to overpay. How long should I wait? So here's what you have to ask your real estate agent is you have to ask them what the appreciation is for the zip code that you're purchasing in. And then you have to decide how much you're willing to buy this property for. Market rate is very rarely an appraisal rate because appraisals are a look back on value and not current market. So you have to know what's within your own threshold. People who are paying $5,000, $10,000, $15,000 over purchase price and appraisal value today, in 6 months will have more than that in equity. So you really have to understand what is overpaying to you. I don't think that doesn't make sense in a market where houses are appreciating. But you have to do what's within your budget, within your assets, and you have to buy things responsibly. Oh, yay. Gon's fan band. Thanks for the super chat. You guys are so awesome. Yay. And I love the little lemon head. Okay. So Rachel says, do I find, oh God, I cannot read this thing. These little chat things. Say yes or no. Oh, is that what I have to do? No, it's still on here. Okay, I'm ending the poll. Okay. This is what happens when old people get on YouTube, guys. I'm like 38 and going on 60. All right. So do I find credit scores go up when you first pull them? I had mine pulled in pre-approval in April and then had a refresher to pull a couple of weeks ago and it went up 20 points. So yes, kind of. So it depends on how long your credit is. And so normally when I see people are on the threshold, so anywhere 680 to 720-ish, I typically will tell them when they will have the most optimal credit. Either that's going to be paying down credit balances, it's going to be letting new accounts age. When you have a brand new credit account like an auto loan or a credit card, it takes 6 months before that starts to positively impact your credit. And it really doesn't impact your credit well until 12 months to 24 months. So oftentimes the increase in credit score is literally just from the length of time of having your actual credit. So it isn't always a bad idea, especially if you've paid everything on time, the credit balances are low, to have them do a refresh on your credit. Okay. Cool, guys. Well, I appreciate you a ton. I'm sure the camera's overheating or it's about to, or I'm about to lose battery. But I appreciate tuning in to a live. Please tune in next Wednesday. And don't be afraid to like, comment, and subscribe to this awesome channel. Thanks, guys.